the thing about Netflix right now, virtually all their growth is flowing directly to the bottom line. So this is where it used to be a company that never made money. Now it's a company that's just spitting off profits. And I think that's going to actually start to take over as like the key thing investors look at rather than just looking at subscriber growth.
So Mark, talk to us about some of these revenue drivers that I know the street's been talking about for the last couple of years, one of which is password sharing, cracking down on that. The other one is the ad-supported aspect of the business. To what extent are those two issues contributing?
Well, I think the password sharing, clearly it's easy, is highly leveraged. You just get a few engineers in a room and they just make it harder to share passwords, and it like creates huge amount of growth. And I think Netflix always knew they had that in their back pocket. The part about it where they're doing, kind of discounted memberships in order, and you get ads with them, that part is working well in terms of selling the discounts. I think in terms of selling the ads, it's going a lot slower for them, but they do have a ton of upside there. So I think, again, that is, I think, where you should be looking the future growth is how do they actually monetize those ads as opposed to just looking at subscriber numbers.
Here's my question. What is already priced in? Like you mentioned the whole they guided it to be good. So are we in like a buy the rumor, sell the news kind of thing at this point, which is unusual for what we would think is like a Mag 7 company, even though it's not technically in the Mag 7?
Yeah, I'm not sure I would sell the news, but I certainly wouldn't expect the password sharing to be, it's not an endless number of people that were sharing passwords. At some point, that's going to start to tail off. And so what kind of has to happen is the ad revenue has to come on strong at some point. Right now, it's pretty weak. I think people see numbers and they're over 1 billion, but given the number of people watch Netflix, it's not actually a huge number. So it's a lot of upside, but there's a lot of execution for them still to do. So if I would, actually, I was going to say if I were holding stock, I do actually hold Netflix stock. I've done very well on it the last few years, and I would continue to hold the stock. I think it still has a way to go in terms of growth.
Hey, Mark, I'm just looking at the financials here, and for calendar year 24, the street's got almost $40 billion of revenue, EBITDA margins 26%, free cash flow $6.3 billion. That is a good business model. How about the rest of the streamers out there? How about the rest of them? I mean, how many streamers can have a similar type of performance in the streaming business? Because you look at the stocks of the traditional media companies, other than Disney, it's a disaster out there.
Yeah, so, there's two things at work here. One is you have to reach a break-even point, which Netflix has clearly done, where, kind of the cost of the content and the number of users, kind of really line up. And then every incremental user is incremental profit and incremental cash flow. And so for Netflix, they're there. I mean, we're talking over $250 million worldwide. And by the way, I mean, why can't that be $500 million worldwide? So they're there. And for everyone else, they're just not quite there yet. I mean, they struggle to keep their subscribers. Netflix, I've always said, is like when you turn on your TV, it's the first place you go. It's like the new cable guide. Let me go see what's on Netflix rather than let me just see, what's scrolling on the cable guide to what's something to watch. And they can't lose them, and people just won't let go of that. Mm-hmm. And so I think the other folks, what's going to happen is going to be a lot of consolidation. If you don't know why you would go to see, if you go to Netflix because they have everything, you go to Disney because they have children's entertainment, you go to ESPN because of sports, why do you go to CBS? Like, nobody can name that. And if you can't name it, it's not going to exist. It's going to be consolidated and just essentially bought for as a library to fill Netflix essentially and maybe Disney.
Wait, do you really have a TV Guide subscription, Tucker?
No, I don't. But I will tell you this.
When did you discontinue it?
I was cleaning out the attic and I found my TiVo. And it's just like, I don't know what to do with it. I don't want to throw it out, but I guess I have to.
I think you're going to throw it out.
Yeah.
Yeah, yep. I just made my mom throw out all her VHS tapes.
If anybody wants a free TiVo, it's in the back
Call
of my
John
car.
Tucker. Here's my very silly question, Mark, is that who is actually a true competitor to Netflix? We can name a bunch of the streamers, right? But they have so many other business models too. Like if I'm an advertiser and you're pitching me, why would I go anywhere but Netflix?
Well, I think the consolidation that you kind of start to see happening with Paramount being on the block, I think what you have to do is you have to build a big library, and and have a lot of original content, and the ability to match that exists, but you have to piece together the right assets. Like you need HBO combines with buying, everything from CBS and ABC that they have in their old library, and like you kind of have to piece that together. So the question is, who has the ambition to do it? At the moment, no one, but I don't think that'll last forever. I think someone will step up to the plate. They're gonna have to do it with a lot of money, though.